Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Michael Blanc. Thanks for being on the show, Michael.
Hey, it's really great to be here, Whitney.
Yeah, I'm so pleased to have Michael. I had the pleasure of meeting him at his live event just last weekend in Northern Virginia. Michael's a author, entrepreneur, blogger. He's the host of the Apartment Building Investing podcast, which I highly recommend. I've learned a lot from his podcast. And Michael's on a mission to help people become financially free with real estate. And he's coaching many people in this business and just doing a fantastic job. And I'm excited to have him on the show. Michael, would you tell us, just to get started, tell us a little about your background, how you got into real estate, and then specifically the syndication business?
Yeah. So, my background is very similar to a lot of people. I wasn't never surrounded by any kind of entrepreneurs at all. I just taught to go to school, get good grades, which I did, get a good job. I got a computer science. And when I got out, I was a programmer and wasn't very good at it, but it was well paid. That's kind of, that's why I did that. And then I got into a startup company called Web Methods. And in March of 2000, we went public. And at the point, it was the most successful software IPO in history, and put a bunch of money in my pocket, which was fantastic. And then I coasted along a little bit. I read Rich Dad Poor Dad then in 2004, and it just completely uprooted my thinking around my financial career and professional career. So I decided to throw it all out the window and quit my job and pursued financial freedom. And because I had some money, I decided to do it all. I became a student of every possible financial freedom tool I could think of. So I started flipping houses a little bit. I took some classes on trading stocks and options. I took an apartment building class. But my big idea was to get into the restaurant business, Whitney. This was my big idea because I was surrounded by a bunch of burger franchisees, and they were crushing it. And they were like, oh, it takes this much to open it. You hire this guy, they're going to run everything, and you just sit back and count your passive income. I'm like, that's perfect. That's my cash flow business. So I decided to go all in. And I went and I signed. It wasn't a pizza franchise. It was a pizza franchise I signed up for at the time. And I did exactly that. I hired a very experienced guy who would run multiple restaurants. And I actually was in a state of semi-retirement for about 4 or 5 years. And then the recession hit and kind of changed things for me, and it became so bad that I had to basically sell these restaurants. And long story short, I ended up losing my software IPO millions in the restaurant experiment, and clawed my way out of it with real estate. But like so many people thinking real estate investing, they're thinking flipping. So I decided to flip houses, and I didn't have any of my own money anymore. They were all tied up in the restaurants, so I had to raise the money. So I had to get into that. And I also got into an apartment building. And after a while, and the problem is I was making money on the house flipping side, but it was a lot of work. I mean, I created another rat race for me. We were buying 2 houses a month. So it was a pretty big operation. We had deployed about $1 million at one point. And meanwhile, this apartment building just kept sending me mailbox money. It was kind of boring, actually. But after a while, I was like, man, I need to maybe do a little bit more of that and a little bit less of this. And that's kind of when I started shifting into multifamily, and I started blogging about it. People were interested in how to raise money and how I put these deals together. And it kind of just evolved from there. So today we have a fairly large training platform. Like you mentioned, we have online courses, we have free resources, we have coaching, we have a podcast, and we also have this deal desk where we partner with people and they bring us our deals. So it's a very exciting times, and it kind of just started small like so many things and kind of went from there.
That's awesome. I hear similar stories, but I'd like to go back to a couple points that you talked about, and because I can relate to being told to go to school, or my wife and I both get a good job, in the safe way, right? That's too risky to do any kind of anything outside of that, really. So what kind of questioning maybe did you receive maybe from family and friends? Well, wait a minute, Michael, you got this great job, right? Good income. You're going to leave that, and going to go do this other thing, So how did you handle that at that time?
Well, it was very disconcerting, actually, and it's bad enough when it's from your best friends, and it's even worse when it's from your family, right? And that was just very disconcerting. And I had not really set up a support group. I was kind of a lone ranger a little bit. And I had these ideas in my head. I had rich dad, poor dad, really knew this is the way I wanted to go. And I was not surrounded by anyone who thought this was a great idea at all. So that's something I did not do very well. I think in hindsight, having someone to tell you that's going to happen, it was very, very disconcerting actually. And I even had some conversations at the conferences there where people were like, man, I'm so excited about this, but man, my family and my friends are not on board. And, coming to the realization that not that you shouldn't talk to them anymore, but you need to kind of encapsulate them and keep them where they are. They're friends and family, and you still love them, and whatever, you go to Thanksgiving meals with them, but you don't listen to them for any kind of business or financial advice, maybe. And you go out and find people who either have done what you have done in a more mentorship role, or at least a peer group of people who want to do what you want to do. And then things start clicking a lot better.
So how did you surround yourself then with people that are out doing it, and that could help keep you motivated and focused, and be encouraging, right? How did you do that at that time, or did you?
I didn't. In the restaurant thing, I didn't. That was one of my major mistakes. I didn't have a peer group, but I didn't have a mentor at all. And I think if I had done that, they would have probably warned me to slow down, because I was like, man, I need to go in. I got all this money in the bank, and I got to deploy, because otherwise I'm not making any money. So I felt this huge urgency to deploy this money, and probably not in the way that it made any kind of sense. With the real estate side, it was different though, because now I learned a few things. So I did sign up for a mentor for the house flipping stuff. And I did start surrounding myself with like-minded people. And I highly recommend that for anyone trying to do anything new, whatever it is, whether it's real estate or otherwise. It's just having a support group around you is so critical.
So then let's talk about your first apartment deal. Did you syndicate that deal?
I did. And I syndicated it. I probably didn't have to. It was really 5 friends and family of mine. But I wanted to. I learned about it, and I wanted to try it. So it was a bit overkill to pay $8,000, for syndication, for a $475,000 building. But that was my first syndicated deal. Yeah.
So I guess, could you tell us a little bit about how you got into it? How did you convince family to invest in this deal? Being your first one, what did that look like?
Yeah, so I had, like I said, I had about $1 million deployed on the single family houses, and I thought it would be this came across kind of a little bit by accident. Now, I had done a boot camp like 4 years prior, and I had spent about 9 months really looking for deals. So I actually I was in it for a good long while, but then I really got out of it, focused on the restaurants, and then did the house flipping stuff. So when I came across this building, it came from one of my home wholesalers, and I was like, I'll take a look at it. It doesn't really, not really what I want to do right now. It's something I want to do down the road. And so, that's how we kind of came across that one. And I just remember being so overwhelmed by the size of that building. And I thought that my investors would just come with me. And in fact, those 5 investors, there was only one of them who actually came across, only two of them who were investing with me on the house flipping side. And the other guys were kind of new. So I had to go recruit some new money. And I thought it'd be relatively easy, and it wasn't. It wasn't at all. In fact, I thought the whole house flipping thing would prepare me for the apartment buildings, and it didn't. You would call brokers up, and they would say, "What kind of experience do you have?" "Oh, I flipped 3 dozen houses, and I'm the man." And they're like, "Yeah, but how many apartment buildings do you have?" And I'm like, "Well, none. But look at all the houses I flipped." And they're like, "Yeah, man, I'm sorry. I'll talk to you next time." Kind of like, and I was like, I couldn't believe it. I was like, come on, are you kidding me right now? And I got like no credit for the other stuff. And so both of those things really surprised me. I thought one would definitely, prepare me for the other. And that wasn't the case at all.
So why did you not just continue to grow your flipping business though, or really scale that? I've met lots of people who've scaled a flipping business, to a really large degree. And so why did you decide to go to apartments instead of just growing that business?
I studied that a little bit, and you're right. We could have done it, and we did have all the systems in place. I was buying houses sight unseen. I had a network of real estate agents. I had someone helping with the closing. I had a contractor who I really liked. But so I thought about it. But the business itself didn't appeal to me, because I didn't like the fact that you once you sold a house, there was no money coming from that house anymore. Like that, something that didn't sit right with me. So I thought, well, maybe I'll build up a rental business. So instead of selling them, I'll just hold them. And that would have worked, except that if I wanted to generate $10,000 per month in income, I would have had to have around, in my calculation, about 50 houses that I would have had to buy. And I was like, oh my gosh, I just got done buying 36 of them. That was a lot of work. And now I need to manage the whole lot. And I can use a property manager, but they're kind of spread out. It would be kind of expensive to do. And the whole thing seemed like a giant pain in the butt to me. Like, and even sometimes when I talk to house flippers today, and by the way, you know, a lot of them that build rental portfolios also create a property management company because it makes a lot of sense. And it's like, man, I do not want to create a management company. Like that's, you know, so I thought about that. Meanwhile, I was like, well, you know, instead of the single family house stuff, why don't I just buy more of these 12 units or 20 units or something, apartment buildings, and a very, very few transactions. And I get to the same goal, but faster. I was like, man, that really, and I can put a professional manager in there and I can get unlimited financing for it. And the whole, if I just put them together on a sheet of paper, pros and cons, I was like, man, the multifamily stuff wins hands down. So that's kind of when I decided to shift away from that.
So you went into the apartments, you're focused on apartments. You know, is apartments the asset class that you are completely focused on? Do you think you'll do other asset classes, self-storage or anything else?
Never say never. I mean, right now I'm focused on multifamily. I'm the kind of the multifamily guy right now. On the equity side of piece, I may consider it. So sometimes when you're looking for something specific, you come across an opportunity that you're not directly looking for, and sometimes you do have to be open to that. And then this is in sharp contrast to what I call shiny objectitis as well. So you got to be careful of that you don't jump in everything that, you know, looks shiny and good. But sometimes I think you have to be flexible, especially in an environment, and real estate is very cyclical, right? So certain things work for a period of time and then they stop working. And if you are really set on a particular criteria or asset class or asset type, and you're not flexible, it makes it more difficult for you to do deals. So sometimes, and you got to be intentional about this, but sometimes it helps to be flexible and opportunistic.
So, you know, coaching so many people, you know, in this business that are just getting started, coming from similar backgrounds as far as, you know, being with a W-2 position somewhere and experiencing the same resistance that you and many people have with family, friends, and naysayers, I like to call it. You know, what advice would you give somebody that's listening right now that says, you know, it's kind of in those shoes. I really want to be an entrepreneur. Or I really want to get into real estate. But I have never owned any rental property, but I want to make it happen. You know, what's some first steps to help them get started?
Yeah, I think we talked about the conference that the word that keeps coming back to me is clarity. People really need to be clear about what they want, and you have to be clear about it on several levels. Number one, you have to be clear about what they want in life and what their current life is. So in other words, if their life is unacceptable to them in the way they are, they're very clear about that, and so it also motivates people where they can't be in the same place they are this time next year. Like if the thought of that is so unbelievably unacceptable, it's going to drive that person and motivate them very, very highly. The second level of clarity is with regards to the strategy. So what you want in life, you got to do something about that. And it could be a variety of things. It could be house flipping. I'm not saying house flipping is not for you. It could be self-storage, right? There's multiple ways to achieve the same goal. And the second level of clarity is really to be what vehicle am I going to use to get there, right? And this is where especially looking at a variety of things and what resonates with you, what kind of investment vehicle resonates with you, and does it really lend itself to a lifestyle you want? For example, I think there's a lot of people think when they're in their W-2 job, they think that becoming a real estate investor is their ticket out, when in fact it's not. I thought so too. So I'm flipping all these houses, and I just created my own rat race. And I didn't want that, but I was a real estate investor full time. But man, I couldn't go on vacation for a week or two or whenever I wanted to. And so all of a sudden I realized that vehicle didn't actually suit I wasn't clear about what I wanted. I thought I wanted to be a real estate investor, but I didn't really know what that really meant. So being clear about the vehicle and in some extent having an open mind with regards to multifamily, because of the issue with multifamily specifically is that most people think it's an advanced strategy that they might be able to graduate to in 10 years. So let me buy a house a year, get some experience, and I'll take the cash from that and I'll roll into apartment buildings. And you don't have to do any of that. And so keeping an open mind to the possibility that, you know what, you can get started with multifamily right now. I don't have to spend 5 or 10 years doing single family house investing. I can do it right now. And having an open mind and educating yourself around that, and then really becoming clear about your vehicle that you're in. I think that's the other level of clarity that is required. And once you become clear on those two things, you have no other option than taking action. Like it would be incongruent, Whitney, if you said, hey, I can't be in this position this time next year, and you don't take action. Something is incongruent. You just lied to yourself and me in the process, right? And therefore you weren't actually clear about what you wanted. But if you were clear, it would propel you to action, right? Because it was so clear in your mind that you can't be in the same place this time next year. So you have no other option but to take action.
So help us take action. Okay. So, we've also, I wanted to go back to, there was a slide that, in a quote that you mentioned at the conference about clarity equals power. And I think it was something about, I think you said, the one who makes the decision will be successful,
It's just, Tony Robbins quote here.
There you go.
Moments of decision that your destiny is shaped, right? So your moments of decision that your destiny is shaped. And I think this is a Tony Robbins quote. And that is exactly, that is it. That's so powerful. It's in the decision that sets everything else in motion.
Yeah, I really like that. And so help us to start taking action. So, that person who really doesn't know where to start. Okay, we're ready to do this. We're motivated. We've made the decision, to do apartments. We're focused on apartments. That's going to be our vehicle. What's some actionable steps that we need to start to take?
Yeah, the next step is so in order to get clarity around that, what I recommend people is that they read my book, they go to my website and look at all the free material. And there's other people's websites, all bigger pockets out there, and just consume all of the free information that's out there, and that helps you to create clarity. Hey, is this kind of business for me? Is this something that I think I can do? And once you've decided multifamily, then the next logical step is you got to educate yourself. It's not rocket science, but you have to use the right words. You have to know how to analyze deals. And these are, again, things you can learn in like 30 days or less. Like these are not like, it does not take years. But the next thing is to invest in yourself. And, we have an online course, we have a coaching program, but there's others out there as well. Find someone that you resonate with and then just start going deep with them. So I think that's number one, is you really got to educate yourself. The other thing also is that what they're about to do here, the goal is to basically be able to quit your job with real estate. And that might take you, 1, 2, 3, 4 years to do. So it's a very worthwhile thing, but it also takes, it's a while. It's not like it's not like you can show success in 30 days from now. You really got to work at it. But one of the things that's encouraging to me is that I don't need to show you how you can accumulate 1,000 units to quit your job. Because all I got to do is show you how to do your first deal. So I have this thing called the law of the first deal. I wrote my book around this stuff because this phenomenon is so strong, so universal. I really haven't found any kind of exceptions to the rule, but it says this: if you do your first multifamily deal of any size, you will be financially free in 3 to 5 years. And the case studies I have in the book is actually 1 to 2 years. There's actually not very many that take longer than that. And it's because the first deal takes the longest, it's always hardest to do, and tends to be the smallest. And then once a person does that first deal, they become a deal and money magnet. And it's not uncommon to have that second deal under contract by the time you close your first deal. And they just come to you. Brokers now, all of a sudden, word gets around that Whitney's buying stuff and is closing on stuff. Well, they're going to call you. Then there's a bunch of investors who are on the fence. They're going to wait to see what you do. And oh my gosh, he does a first deal. I missed the first opportunity. And all of a sudden, they're starting to come to the fence. And your comfort zone grows as well. So all of a sudden, whatever deal you chose, it could be a duplex or a 12 unit or 20, whatever it is, all of a sudden you've done that and your comfort zone now is at the next level. And so this is why the deals get progressively larger. And this is why most people replace their living expenses with just 2 or 3 deals. That's it. And then most of them keep going because they enjoy the activity. They're not spending any more time working on it because they have proper managers managing it. And they just, they keep working on it and keep, growing a portfolio and building a legacy for their family. And so the point is this: you can just boil it down to one thing, which is your first deal. Just focus on your first deal and everything else will follow.
So getting that first deal, what would you say is the hardest part, of that process of getting the first deal?
I don't know what the single hardest part. I think a lot of people are overwhelmed by the idea. And I think it's because there's 121 steps to kind of get your first deal in people's minds. And so a confused mind says, no, and a lot of people just get overwhelmed. And even if they sign up for some kind of coach or program, they still feel a bit overwhelmed. And the way to overcome that, in my experience, is just do the next three things. Right? Everybody, if you're trying to do anything in life, you know the next three things you got to do, right? You got to read a book, go to a conference, call an investor, whatever it is. You write them down and you do them. So let's say you knock it out in a week, you cross them off your list, great. You write the next three things down and you do that the next week and you cross those off and you keep doing that all of a sudden, without thinking too much. And then, two months later, you look at all your sticky notes you crossed off, you look up and you're like, holy cow, I've done a lot of stuff. And this is how we take, and I don't really like the word massive action. I call it tiny action. This is how we take tiny action each and every day, because if we take massive action, oh my gosh, I'm so overwhelmed right now, I'm not even going to try. All right. But if I take tiny action, if I do the next three things every day, I can get my head around that. And just don't even think about, 4 to 121. Just think about the next three and just do those.
I really like that. I've never heard somebody talk about taking tiny action. As far as the massive action, you hear often, but it makes sense that you get overwhelmed and then you kind of quit, or you get scared of it, right?
Or or worse, you never get started. That's the most thing, because once you do get started, with our students, we get into a pattern of 60 days. All we do is activity. So we just do the activity without regard to outcome or results, and because you want to build up new patterns. So taking tiny action every single day and tracking it is a very powerful thing, because then you now have built new habits, and now it's now you're in this mode of taking action, and you're good to go.
So Michael, tell us before we have to go, but tell us the number one thing that's contributed to your success.
Number one thing, I will go back to clarity. Clarity is so powerful, because I remember when I wasn't clear about things, I just got unclear results. Versus being very clear about things, really resulted in much clarity. Really is power. It really is. It really allows you to function. I think also combining clarity with a sense of mission or purpose. So with the restaurants, my motivation really was money. I just wanted financial freedom. I wanted enough money coming in so I could do whatever I wanted. Kind of very self-serving. And with regards to the real estate stuff, when I started blogging, it was I was in a different place at that point, because I just wanted to share. I wanted to help other people prevent the mistakes I made and get there faster. It taken me I was in a state of semi-retirement 2 or 3 times, lost it again. I was like, man, maybe there's a more direct route. So really wrapping a clarity with a mission is very, very powerful.
So it lost it 2 or 3 times and then come back. It's impressive. How'd you stay motivated to do it? To try again. Let's do it again. Even, I can imagine, family too, wife or kids, it's like, how do we stay on board, and just keep motivated to do it again after we've lost it a second time or whatever?
Yeah, that's a good question. I don't know. Maybe I'm wired that way. I just keep going. I think having a support group. My wife actually was surprisingly supportive throughout it all. I think that's really key. And don't get me wrong. There were some pretty down days. And, when you're so paralyzed with fear that you don't want to do anything, that's like the worst feeling at all. And I've never suffered from depression, but I think that's probably how depression might be, where you just don't want to get out of bed at all. And man, that's scary, because things are happening around you and you're like, man, I just want to stay in bed today. And that's terrible. I've had that a few times, and you just got to keep getting up. You just got to keep getting up, and because the alternative is to give up, and what? That's no fun either. You got to dust yourself off and keep going. Life's an adventure that way.
So Michael, how can the listeners get in touch with you?
Yeah, my website is themichaelblank.com. That's THE, Michael, BLANK.com, or just Google apartment building investing. I should be on page 1 of Google there. And just look at, look at my YouTube video or podcast or blog articles and see if multifamily investing is for you. We also then have paid online training and coaching. And then the book is called Financial Freedom with Real Estate Investing, and that's available on Amazon, bright yellow cover.
Awesome. And what's the book, as far as when we get the book, what's the biggest thing that we're going to be focused on in your book?
Biggest thing is probably the first deal, the law of the first deal. Why, what it looks like, why it works, and how you can use it to become financially free.
Awesome. Thank you again, Michael. Well, Michael, you've been a great guest. I really appreciate your time today, and I appreciate the listeners being on today and hearing Michael and his story. And I want to invite you to come back tomorrow, and Michael's going to help us to get our first deal. And so we're going to continue the conversation tomorrow. So we will talk to each of you tomorrow and on the Facebook group. I hope you'll be there so you can interact with experts like Michael, and we can grow our business together.
Awesome. Great to be on the show, Whitney. Thank you so much.
Phoenix Syndication Workshop 2019 is a premier educational and networking event hosted by noted real estate investors Ben Leibovich and Sam Grooms. PSW is a 2-day event being held in Phoenix, Arizona on January 26th and 27th. The first day is dedicated exclusively to nuts and bolts underwriting training. Ben and Sam will give a detailed presentation of their approach, technique, and underwriting model, which allows them to pick out the best deals in this very competitive environment. A recent case study will be utilized as a basis for this training. On day 2, the attendees will learn from industry professionals. Ben and Sam will be joined by a mortgage broker, property manager, and an attorney to answer your questions. As a bonus, everyone will visit the property to experience the process in action. This type of in-depth and actionable access is truly rare and invaluable. Ben and Sam are passionate about giving back, so 20% of the gross revenue from this event will be donated to a nonprofit. Register for the Phoenix Syndication Workshop by visiting justaskbenwhy.com/Phoenix.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.